Welcome, dear traders. One more eventful year has already passed, and today the Asian region opened the first trading week of the year with a mixed sentiment. Notably, the week is shortened. Thus, Japan suffered a powerful earthquake. Fresh Chinese economic reports created new talks for the region's markets, and risk appetite mounted. At the present, all eyes are turned to the possibility of a key rate cut by large central banks. However, it's still unknown which banks will take such a decision, when this will happen, and how sharp the first cut could be. Although there are some assumptions concerning the timing and magnitude from a geographical point of view, there are some doubts. Some analysts suppose that the Federal Reserve will be the first to lower the benchmark rate this year. According to recent statements, the central banks of the Eurozone and the United Kingdom intend to maintain the hawkish stance. Meanwhile, Fed Chair Jerome Powell provided markets with a clear dovish signal. Curiously, the US regulator raised the key rate to the highest level since December 2007. The FEDWATCH tool shows that 15% of traders expect the first key rate cut as early as January. The likelihood of this event in March is considerably higher, 70%. What's more, analysts are trying to predict how radically the central bank will lower the benchmark rate in the case of a rapid drop in the economy. For reference, the US dollar has been gaining in value for the third session in a row, despite dovish sentiment expressed by the Fed. During the Asian session, the US dollar index, which measures the greenback against the basket of six major currencies, increased to 101.50 points. This week, the US will disclose several important reports, including labor market data and minutes of the Fed's meeting held in December. The labor market figures will help traders estimate the prospects of the US economy, while the meeting minutes may unveil the current sentiment among the FOMC members. Until then, the US dollar index is likely to show a technical recovery. During the Asian Pacific session, it was hovering within the range of 101.30 and 101.60 on a daily chart. The US bond yield has also been trading in the green for the 3 days already. The yield has been recovering from its 5 months low recorded last week. Nevertheless, the USD dollar index is losing value and may slide to the support level of 101.10 recorded on December 29. The nearest resistance level is seen at 101.80. The yen dropped and then increased to 141.60. However, it stopped its 3-day rise, and today the yen was trading within the range of 140.70 and 141.70 under bearish pressure. However, the yen's losses were a bit limited. The fact is that the Bank of Japan may soon switch from its ultra-loose policy to a more hawkish approach. The change may come into force only in April, after wage negotiations that take place in March every year. Some analysts suppose that the Bank of Japan may take such a decision as early as January. On Monday, the western part of Japan suffered a 7.6 magnitude earthquake, which resulted in a tsunami measuring 1.2 meters high. However, the Japanese stock markets are closed until January 4 because of the New Year holidays. That's why the influence of the natural disaster on the stock market is limited thanks to low liquidity. The Chinese economy continues to provide markets with difficult tasks. According to the data issued on the weekends in December, business activity failed to meet forecast and dropped for the third month in a row. It means that the likelihood of a Chinese economic recovery has dropped even more. On Sunday, Xi Jinping said that the country's authorities intended to support long-term economic development using deeper reforms. At the same time, on Tuesday, a private survey showed that China's manufacturing activity grew at a faster pace in December. A rise in production and the number of new orders were the main drivers. Such radical discrepancies in the manufacturing PMI only exacerbated the main issue concerning the fragility of China's economic recovery. In other words, the data continues to indicate signs of stabilization. The Australian dollar managed to benefit from the situation, since China accounts for one-third of Australia's exports. Higher demand for the world's second-largest economy will be a positive factor for Australia's economy and its currency. Oil futures also jumped today and supported commodity currencies. Against this backdrop, the Australian dollar recouped its recent losses, even despite the greenback's strengthening. Early on Tuesday, the Australian dollar was trading upwards within the daily range of 0.6800 and 0.6840. Bulls may push the Australian dollar to the resistance level of 0.6890 against the US dollar. The nearest support is located around the critical level of 68 cents. The New Zealand stock market is closed today for the New Year holidays. Early on Tuesday, the New Zealand dollar was mainly fallen and even fell below 63 cents at a particular moment. The price was hovering within the range of 0.6290 and $0.6330. The nearest support and resistance levels are located at 0.6250 and 0.6350 respectively. And this is how trading took place in the Asia Pacific region today, 2nd of January. Subscribe to the InstaForex TV channel and get relevant information. Do not hesitate to leave your questions or comments. Our experts will promptly answer them. And see you later.